Well, welcome back to another episode of the Meet Kevin Pod. This is where we're going to talk about real estate. Today, we've got the creator of the channel, One Rental at a Time here. We've got that up on screen right here, One Rental at a Time, which I think is actually a great way to get started. You are also the author of two books, which I have right here. One of them is One Rental at a Time, The Journey to Financial Independence Through Real Estate, which actually has incredible reviews, 4.7 stars here, 1344. This is great. And then there's a newer book that you just released, and that is 15 Conversations with Real Estate Millionaires, presented by One Rental at a Time. Welcome. Thank you for being here.
Thank you, Kevin. This has been something I've been looking forward to for a while. So thank you for the opportunity.
My pleasure. So tell us about what's on your mind. Should we start with crash, or how you got started, or what do you think?
Will you tell me what's important to the audience? Because
crash. Everything's crashing, right? You said you called the crash. What crash did you call?
So about a year and a half ago, we were sitting at about 6.2 million transactions, existing home sales. Jerome Powell came out at Jackson Hole and said, basically, I'm going to kick the rich people in the nuts. And he said these things about housing. And everybody's like, the crash is finally coming, right? The crash has been called every year since 2010.
This is true.
This is true.
Double dip back then. It was supposed to be a double dip recession. The banks were going to release the shadow inventory of foreclosures because they're trying to screw the little guy.
Yes. I didn't believe it, but I went back and did some research because we actually had a time in history, my lifetime, not yours, where interest rates had gone up 500, 600 basis points. From 1978 to 1981, rates, Paul Volcker, right? After Arthur Burns, Paul Volcker comes in and does it. So I said, what happened to housing?
Yeah.
So actually, if you go back and look at housing from 1978, this is a very interesting statistic that people need to realize. 1978, we did roughly 4.2 million existing home sales.
Okay.
Guess what year we broke that number? Because after 1978, we went lower because rates were going up.
Right. So some kind of recovery, probably before the savings and loans crisis. So what, mid-80s?
Yeah, it was actually 18 years later.
1994. Wow.
So think about that.
Yeah, because I would have guessed maybe 7, 8 years or something. 18 years.
18 years until the transaction volume exceeded 1978.
Wow.
Now I ask myself, what happened to price?
Yeah.
Because again, if rates go up 500 basis points, prices are supposed to go down 10% for every 1 point, right?
Right.
It's buying power.
Yeah.
That's
simple.
not value. Right? It's buying power.
Right.
And they didn't.
Wow.
On a nominal basis, for all that time, only 1 year was nominally down. It was fractionally less than 1% down.
Wow.
Every year was up.
Yeah, and that's like 81 or 82 or something.
Yeah, it was like 85 or 86.
Oh, back there. Okay, wow.
Yeah, that was the 1 year was nominally down.
Interesting. So in other words, during the Volcker era, that recession was nowhere near effective enough to really cause any kind of housing pain. People were able to look through that pain almost.
Well, I don't know that I think it's very similar today. If you're in the housing business, it's a depression.
Oh my gosh. Well, if you're a lender, you're screwed.
You're screwed. You're an agent, you're screwed. You're an appraiser, you're screwed. So which again, if you look at housing as a part of GDP, it's a significant portion, somewhere between 8 and 12%.
Yeah.
That's in a depression. It has been negatively adding to GDP for 5 quarters.
Wow.
So again, it's a drag on GDP. So it's a depression.
Yeah.
But everybody wants to talk about price. And just like the 80s, people fought to stay in their homes.
Interesting.
Right? And oh, by the way, what do we have today? We have people fighting to stay in their homes. We have interest rate lock-in. I like to say the Fed broke housing, not because they kept rates too low at all, but for too long. Not only do we have all of those purchases in 2020 and 2021, we have all those refis.
Oh my gosh, yeah.
So if you look at everybody, I don't know, depending on what Black Knight number you use, something like, call it 90% of loans are sub 5%.
Yep.
It's not going anywhere. And if you don't have to sell, you're not listing. And oh, by the way, if you really want to break it down, a lot of people's payments today are less than rent.
Yeah, no kidding. Yeah, because the rent's going up because of inflation, but people are locked in on these. It's almost like the 30-year mortgage saved American housing. Would you say?
I would totally agree. The fact that we have fixed rate lending is why we're okay, and Canada's not.
That's a good point.
UK is not. New Zealand is not. right? There's a lot of folks that most of the world doesn't have the 30-year mortgage. We are very uniquely positioned.
Yeah, usually you're just like 10-year, and then you have to refinance.
It's 5 usually in most places. 5.
Wow.
5.
I think Germany. I think somebody was talking to me about 10, but
most of the countries are 5 that I've heard of.
That's incredible. So if it's the 30-year mortgage that saved us, then do you ever look at the seasonality of, okay, well, now some prices are going up in the spring and they're coming down in the winter? Like, do you ever look at a year and say, here's the best time to buy, or what do you like to look at?
So I've been buying for 22 years.
Nice.
Right? One rental at a time started in 2001 when we bought 1818 Norris Drive East. You can look it up on Zillow.
Wow.
It was $107,000.
Well, let's look at it. Sorry, what was it?
1818 Norris, Norris Drive, 93703. It's in Fresno, California.
Okay.
So when you pull it up and you look at the values, I'm the buyer that paid $107,000.
Oh, that's awesome. Now there's estimate for what it is, but it's like 307.
But let's play this out, because if you pull it up for folks,
awesome.
I buy it for 107.
Go ahead and feel free to show that up on screen. I got it up on.
So I buy it for 107. About a year and a half later, I do a cash out refi, and I buy more properties with it.
Yeah.
And then about a year and a half later, I sell it for 260 something.
Yeah.
But look at the next transaction.
75 in 09.
I invested through, right? So I started before. I sold at the peak because I knew there was pain coming, and I 1031 into apartment buildings.
At the end of 05, that was the top of the market.
Yeah.
Because the market started turning at the end of 05, very slowly through 06, 07. And it wasn't until 08, 09 you actually had the drop, the full drop. Wow, that was great timing. Good job.
Yeah, so we sold 8 houses. We 1031 into 80 units. So we were in multifamily when the crash happened.
Wow. Okay, well, that also got hit to some extent.
Values did, not rents. Rents went up. We actually had better quality tenants because people were losing homes.
Oh my gosh. Yeah, that is interesting. Yeah, you almost rarely, it seems like something my in-laws said too, is like they didn't really see rents come down in 08, 09 because of the short sales and foreclosures. And people were forced into renting. So it's almost like your pool of tenants actually dramatically increased.
Correct.
And it just it made these survivors capable of, frankly, being wealthier. It created and gave birth to almost the invitation homes.
Oh, no question. 2009, 10, 11. I remember the day. So I was buying I only buy in Fresno. It's my only market.
Okay.
I was buying out of the MLS because there was a process. Every Friday, there'd be a load from the banks that would publish Monday morning. And it was just a routine that I did for a year and a half.
Wow.
Every Monday, I'd write more offers. And then one Monday, no inventory.
Wow.
I'm telling myself it's a blip, right? Data corruption, all that stuff. Next week goes by, nothing. So I'm calling people because, again, I'm a known deal maker.
Sure.
And they say, Michael, these guys out of the East Coast, they're buying the entire book. Not only are they buying entire book, they're paying list price. I never paid list price for anything.
Of course, yeah.
So they're buying it at list. I'm like, the world just changed.
Wow.
Right when Wall Street showed up.
Wow, yeah, because that's back when Invitation Homes was like 2011 or something like that. And that's when Warren Buffett's like, if I'd
buy every home.
I'd buy every home I could. Yeah. Wow.
I invested through that, yeah.
That is really incredible. Okay, so what's your take now then? I mean, how long can you go with a transaction crash? I mean, at some point, people have to sell, or maybe institutions sell. Maybe. Do they have to? We don't know. Do we ever get any kind of actual price discovery? Because that seems to be the difference between us and these other markets that are crashing. Is, sure, prices came down from May of 2022 to December, but they're basically already year over year even again. So when do we get this real discovery, or does it take real layoffs? Like, what does it take?
Well, the whole key to housing is you need supply, right? A lot of people look at the supply-demand curve of housing, and everybody who's a crash bro talks about demand.
Yeah.
Guys, affordability sucks. I get it. It's not a record, though. A lot of people like to talk about it being a record. 1981 is the record. Wow. If you really want to look at it.
Era.
And we still did 2.2 million homes. So again, most unaffordable ever. We never do zero. There's always death, divorce, cash buyers, all of that. So my answer to a lot of folks is, unfortunately, I believe what happened is in 2 years, we had all the appreciation for the decade.
Yeah. Just the last, 2021, 2022, yeah.
So we're going to have 8 years of flat.
Yeah, it doesn't surprise me, actually.
So again, affordability is bad.
Yep.
How does it get better?
Yeah.
Wage inflation, little by little. It takes time. Thank you.
Yep.
We are not having a repeat of the Great Recession. I am so sorry. It's not coming.
Yeah, I actually agree with you, but it's also interesting because essentially you're also saying we're not having a repeat of the 2021-22. And I think there are a lot of people who had sort of like the FOMO of like, oh, I'm missing out on real estate, that they're like, all right, well, this will be my chance. If prices fall 30%, then I'll buy, and then we'll get all this appreciation in 2 years. I mean, real estate turned into a meme stock.
It did.
So I remember it was 2022, it was like March, Jerome Powell drops rates to 0. First thing I did is I called my lender, I go, refinance everything. Yeah, everything, right? And then we took capital out, and we thought, okay, how is this going to affect real estate? And we're looking at the week-by-week transactions, and we're like, well, things are still selling, prices are going up, and everybody's like, there's going to be a big crash. And I'm like, well, then why is all the numbers going up? The numbers are not going up, the inventory's going down, prices are going up, right? And rates are down. Exactly. That was 2020. So I bought a bunch of properties in 2020, but it wasn't until 2021, 22, everybody went nuts because you had the convergence of low rates, Airbnb, like everything that just said, go buy real estate, it can never be wrong. It's crazy.
It was the closest thing I have seen a repeat of 2005.
Wow. So and that's when you got out in 05.
I got out in 05. In 2005, you would go to, I live in the Silicon Valley, and everywhere you went, people were talking about the last house they bought. It was housing never goes down. This is pre-crash. Housing never goes down. It always goes up. And people were flipping contracts. Oh. That was the closest I saw was 2022, early 2022. It just couldn't go wrong.
Yeah.
And I start screaming, right? I was like, guys, real estate investing is not easy. You all are financial speculators, and you're going to get spanked.
Yep.
And I actually think the most pain is coming to those poor LPs, limited partners, and syndications. A lot of bridge debt.
Well, because, they have these shorter-term loans because you're not getting Fannie Freddie loans.
No, you're getting short-term, interest-only bridge debt, DSCR loans.
Yep.
And
but that's how they pump the cash flow. That's how you get the syndications. I look at some of these syndication documents, and they're like, oh, yeah, we'll give you a 6% cash flow. And then you look at it, and they're like, oh, we'll charge you a 1% management fee per year on the asset value, but we're going to defer that management fee until we sell the property, which basically temporarily pumps your net income on these projects, on these syndications. But not only that, you're looking at these interest-only loans. You're not paying down any principal. You're going to have that refinance risk at some point in that
very
7-year
short
term.
I mean, you're doing 200 units. You're trying to do value add. Are you kidding me?
There's no way.
Moving tenants, vacancies.
Dude, there's no value add in these in my opinion, these institutional investors are plowing down like pension fund money, and they're getting paid based on acquisitions and basically deploying the capital.
Correct.
They're not getting paid. It's like you're not getting a bonus because you added value. Now, can you do value add on multifamily? Of course. You go and find a low rent property, raise the rents, whatever, right? But realistically, I think of Grant Cardone, his value add is putting his name on the buildings. That's his value
10X
add.
Something.
Yeah. It is 10x living is what he does. And to some degree, it's very almost Trumpian. It's like, all right, this property is worth 200 mil, but now that it has the Trump name on it, it's worth $1.5 billion, which then you go, okay, maybe Trump is bringing in a lot of revenues because he's doing events and stuff like that. But going to Cardone, because that's a little less complicated, that's what he does. He puts his brand on it, and now it's worth more.
Well, also, he's on record of bragging about buying at 3.5 caps and all of that. Now that you have a 10-year, roughly 5%.
What's the point?
What's a 3.5 cap? That's redo the value of that. It's not there.
Yeah, I just in my email, I have this email from JP Morgan, and they sent me. Oh boy, it's one of these first ones. A bunch more just came in. Here it is. Okay, quick update. Our JP Morgan Treasury market fund yields have bumped again, now up to 5.33%. Same day liquidity, no holding period, stable value, $1 in, $1 out. 5.3%. You do nothing. Yeah. No risk, 100% liquidity.
Exactly.
It's insane.
It's insane. Yeah. And now if you're a syndicator trying to refi into that, you're going to go get 7.5%, 8%.
So you're massively negative.
You're massively negative. You can't afford the debt service. The pain is real. So
you have to sell then.
The bank's going to take it back. You have to sell. You may not even have a choice. The bank's going to say, give it to me.
You're right. You might be right. Well, so isn't that possibly going to lead to this price discovery over time? Or are you saying those sort of sales are what are going to keep a lid on prices?
We have to separate commercial and residential.
Okay, fair. Yes.
Commercial real estate repeated the sins of 05 residential. What do I mean by that? Go back and look at 2005, the vintages of mortgages. Okay. 51% were ARMs.
Oh, adjustable rate mortgages.
not only adjustable rate mortgages, but I think it was 13 or 14% were pick a payment. Remember those? They're illegal now.
Well, of course. So the negams.
They're pick a payment negam.
Oh, is that okay? I hadn't heard that version of that.
Pick a payment was, and everybody picked a payment, which added debt to the end.
Okay.
So
okay. That's okay. Got it.
Same deal. You did the same thing in commercial. So the pain that is transpiring right now is going to be concentrated in commercial. It's just starting the first inning. Residential, up until this year, 98% of loans were fixed. The blended, or what's called the effective interest rate, is 3.6%. It's nothing.
Nothing, yeah.
Right? Your payment's less than rent. You're not going anywhere. This is going to be like 1980 for residential. My family, not very rich, fought to keep their home in like 83, 84. Dad was unemployed. Mom was always stayed home.
Yeah.
So he's unemployed in 84. It's a bad time in the Valley. We're one day away from being foreclosed on. And we do everything we can to fight to stay there because we know if we have to leave, we're screwed.
Oh, gosh. Yeah.
Because anywhere we go is smaller and costs more.
Yep.
Because it's just where we were at the time. So that's what people don't understand. This is not 07, 8, 9, 10 where you're walking away from a payment because it tripled.
Yeah, exactly.
These are people with 3% mortgages where the payment is less than rent.
It's a third maybe or whatever.
It's where we live. Yeah.
It's the opposite, right? It's like it's 08, 09 happened because the people who were in their homes saw their payments go sky high where they're like, I could rent this same place for a bargain.
Fraction.
So of course you're walking away. You're please, like they would do. I remember these short sale incentives. It was like the bank, if you agreed to do a short sale with them, they would give you $10,000 to as like compensation for going through the process, 10 or 15 grand for moving expenses. They would just give you money to not have to go through the legal process because it was cheaper for them in the long run. So you were getting paid to go from a high payment to a low payment. Right?
Yeah, exactly.
That's such an interesting point because now you're actually locked into a very low payment and a low rate. You are basically being paid to stay.
No, and that's what people who are calling a crash in prices don't understand. People will fight tooth and nail to stay like my mom and dad did in 84. They're not going anywhere. They will get roommates before they lose that house. They will lose their car before they lose that house.
That's interesting.
And that's what people don't understand about residential. Residential is really pretty stable.
And I think that it's going to have, like, I'm a big believer that we're going to have like this weird volatility over this next decade. Like, I don't know if it's, I certainly don't think we're going to see a 21, 22 for a very long time, maybe ever again, because that was insane.
That was
the confluence of money printing and low rates and everything. I don't know that we'll ever see that.
I'll be clear. I hope we don't see it again. That was unhealthy.
It was, I agree with that. Just led to speculative mania. It's crazy. I think it's going to leave a lot of people with a sore taste for real estate now too, especially people, I was in Vegas the other day and I go through an open house and I'm like, so why are they selling? And they're like, oh, it's an Airbnb. And I'm like, okay. Oh, they just banned Airbnbs here. And I'm like,
New York did the same thing.
Yeah, rip. So, and we should definitely talk about the Airbnb bubble, but in this price volatility, it is interesting because I don't know if it's because there's so few sales or what it is, but this summer I'm out in markets and I'm seeing everything's multiple offers almost everywhere.
So I actually think there's 3 markets going on right now.
Okay,
I look every day.
Yeah, please.
So for the folks watching this, if whatever market you're in, I suggest you do the following. Draw a line called median home sales.
Okay.
Whatever that is for you.
Okay.
Right? In Las Vegas, I think it's like 440 grand.
Yeah.
Just use
pretty
that as
in line with America almost.
Pretty much. Yeah. So anything that's 2x the median or above is really slowing down. 2x the median, so 440 times 2 is 880. Crickets.
For that area.
So like if you're in 200 and
it's 700,
then it'd be 1.4.
Got it. Okay.
So wherever the median is for your buy box or your area, double it.
Okay.
That's the luxury market. Yeah. Crickets. Yeah. Slowing down.
I stay out of that stuff.
If you want a deal, like if you happen to be lucky enough to be shopping for a luxury home, go do what Patrick Bet-David says and write disrespectful offers. Right? Go get 30% off. Seriously.
You probably could in this.
Yeah, if they got to sell.
He's not wrong.
They got to sell.
Yeah.
Okay, now take that same line and go the other direction.
Okay.
So if you're 75% of the median, and you're a clean property, which means passes FHA, passes VA inspection, there's none of that stuff. They can't build them.
No.
That's where you get your multiple offers. So you're getting very noisy indicators. But that said,
that's 525 on 700, by the way.
There you go. So if you know this market, go find a 525
it's
home.
Multiples.
Exactly.
Yeah,
there's nothing there.
I like this metric. This is good.
But here's what you do, right? You find the wedge deals.
Okay.
Go find a 525 that doesn't pass FHA.
Right.
Then you can go get disrespectful. I did this last year when everybody was saying you can't do it. Like Yahoo Finance, 87% of the people last October said it's a horrible time. It just pissed me off.
Oh, yeah. I mean, what do they say? Be greedy when people are fearful.
Yeah, so I said, I called it on my show, right? I said, I'm going to go find one, and I'm going to buy it out of the MLS.
Wow.
I bought two.
Good for
30% off. Fixed them up, flipped them, made 90 grand total.
You flipped
I did
that?
flip them.
Wow, you're like, it's too much. I did too well. I must
it
realize.
was what I called. I had somebody I wanted to pay a little finder's fee and all of that, but it was just annoying.
Okay.
But what you're trying to do with House Hack,
Yeah.
because you have the cash,
Yeah.
it would have worked last year. It's going to work brilliantly this year because your competition is less.
Oh, interesting. Thank
If
you
you're
for that.
competing with owner Ox,
Yeah.
you shouldn't be. Like if you're going for the pretty stuff, ignore it.
No, if I see something an owner is okay buying,
Out.
Yeah, no.
Just don't even bother showing up.
Yeah, you're right.
But I mean, what did I buy? I bought one on Michigan,
Okay.
which people can go look at the pictures.
Yeah.
It had a shake roof.
Oh my gosh, you bought a wood shaker.
I did.
Because
it
the
looked
insurance,
ugly.
Well, it's funny because the buyers can't even get insurance on those
Exactly.
suckers. It's brilliant.
So I knew I was going to rip it off the first day I owned it.
Of course, yeah.
Put it on for 12 grand. Also, it had a 4-car garage. I've been in the market for 21 years. It's the only 4-car garage I've ever seen in the city.
Is it weird? Like,
No, it's 2 car. It's a 2-car and a 2-car. A hot rod guy owned it.
oh, okay. So he added on another.
He added
2-car.
on another 2-car behind his.
And you have larger lots out there?
It was a corner lot, so it had easy access off the alley.
Oh,
so it
well,
was
that's
still like a
okay.
10,000. But
Okay.
the point was, it had something that nobody else had.
Yeah.
4-car garage.
Okay.
The house was built in the 50s, so it was a ho-hum 3-1.
Yeah. Oh.
Right? Just classic. But it was listed for $230. We bought it for $170. I put $45 in. We sold it for $270.
Let's go.
In 93 days.
Good for you.
And
So you got the time frame down. I tell everyone, I want these projects done in 45 days.
That's the only
they're
wrinkle
never
there.
going to be done in 45 days.
But you have the 90-day FHA rule. Well, again, if you're going to keep them,
Oh,
it
yeah,
doesn't matter.
for flipping. Yeah. Okay. Well, but that also can include your escrow time.
Correct.
You know all that.
Yeah. All
But this
of
is
that.
interesting. So I like this stat because I agree with you. And that's interesting what you're saying about all that fear last year. So you're saying that you're seeing that similar fear now?
Absolutely. We are repeating Q4 of 2022.
Oh, tell me
People
more.
are leaving the market.
Tell me more.
No, they're leaving in droves. Buyers are hearing it can't work. Last summer, we were hitting 7. Now we're hitting 8.
Yeah.
Buyers are pulling away.
up.
Transactions are going down. I expect September existing home sales to be 3.85 million, which will break the low of 4.02 million.
Oh, wow.
We're going sub 4, even though Redfin CEO says we're at the bottom. He's wrong.
Well, he says that all the
He's
time.
clearly wrong. But we're going
Their
lower.
stock's at the bottom. Oh.
Yeah. But here's the deal. There will be more opportunity in Q4 and Q1 than last year.
Okay, so Q1, you think they'll... So last year, we had a miserable Q4. Stocks were also horrible.
Yep.
And then everything started booming again in Q1. Why do you think this Q1 it wouldn't boom? And like Q4 will be painful, but Q1 will...
It'll be on rates. So again, last year I do this every day. So until the end of January, it was rough.
Okay.
Rates came down. You saw people if you actually go back and look at the transaction volume, we had a bump in February because of all the flipper inventory was left over.
Interesting.
And they sold.
Yeah, so rate sensitive. I mean, Christian, you could throw up on screen for a second here. This is, and you could see it here. This is what, if I throw in a 740 credit score, which it always tries to default to 700, but I go for 740. And the 30-year fix not only broke 8, it is now at 8 1/3.
Yeah.
Which is insane. Correct. And then looking at I'll go to the 10-year treasury. I'm going to zoom out here for a second on the 10-year treasury. So I want to let's go to the beginning. So like this sort of drop. So as soon as you got that drop in rates the first quarter,
This is what
it was
happened.
a downtrend.
This will happen again. This is what you have to watch. We are building pressure in a pipe.
Yeah.
That pressure is called demand.
Uh-huh.
Everybody is sitting back waiting for rates. How many people are waiting for rates to come in?
Oh, everybody says as soon as rates are 3% again, I'm buying.
Well, I think a lot of people are saying it's 6% again. They're
Are you
buying.
serious?
I do. I talk to agents every week
Okay.
across the country.
Yeah.
And right now, 7% is the barrier.
Oh my God.
7%, 8, because again, I've been studying the consumer because I have an econ degree for 30 years.
Nice. Yeah.
The consumer psychology is rather repetitive. We get used to things a lot quicker than we used to. You can go back and look at the mortgage chart.
Yeah.
We hit 6% last August.
Yeah.
Crickets. Nobody shows up to
Yeah,
open houses.
everybody's like, oh my God.
Comes down, goes back up. 6% went through like a hot knife through butter. 6.5
Interesting.
pulls back. 7 pulls back. Now we're at 8.
Wow.
It's going to build up. Tomorrow's an important day, as you know, as I'm sure
Jobs.
you'll be live streaming at 5:30. If we get a number over 170, we get an unemployment rate ticking down to 3.736, rates are going to rip.
Oh, yeah, of course.
But I think a lot of the economy is slowing down. We get a 155, we get a 3.8, 3.9
Yeah.
participation rate, whatever it is.
Yep.
It's going to be a sign the Fed's done. I personally think the Fed is done.
Yeah.
I also think the Fed doesn't cut next year. So I'm the higher for longer camp.
Oh, really?
Right. It'll be the first time they haven't cut for 15 months. The record currently is 11 months.
Yeah.
Because I think Powell wants to kill the Fed put. I think he's tired of Wall Street and their gambling, punishing the little guy.
Wow.
And he's going to hold for 15 months.
Wow. So that would put us, 15 months would put us.
All of next year. So maybe it's 18 months, but no cuts in 24. But
Oh,
also,
you mean 15 more months?
Yes.
Okay.
15 more months.
So start hiking was what, like March of 2022, end hiking maybe basically a year and a half later, and then you think basically a whole nother year and a third of stay. Wow.
Right.
Yeah, that's going to create opportunities for just years, I feel like, of people not wanting to buy, no?
The other thing, you know this, but for the audience is we have a unique spread between the 10-year and 30-year. It's roughly 300 basis points.
Okay.
Historically, it's been 175, 180.
Sure.
So we have 100 basis points easy that could come in once the banks think the Fed is done. Until they think they're done, they're going to add the spread.
Well, it's also all the speculation going on in shorting bonds and stuff like that. Okay.
All right, but once the Fed has made it clear they're done, you're going to see that come in, which will mean rates are in the high sixes.
Okay.
And again, I think there's pressure in the pipe. I think there's demand behind that.
Yeah.
We'll see. But we will not. I don't think we get back to 6 million existing home sales back to where this started for at least 5 years and probably 8 years.
Interesting. So my crazy theory is that 10 years, we're at 1.8% interest again. Is that possible or highly unrealistic? What's your opinion?
So again, so 1.8 10-year, 1.8, what are we talking?
Mortgage rate, which is lower than what we've had before.
I would be afraid if that happens.
Why?
Because something massive would have to break.
Really? Because, I mean, like, we have, we had the European sovereign debt crisis in like 2012, 13 or whatever. But I mean, right before the pandemic, their mortgage rates were like 1.4.
Sure.
Which is insane.
Japan,
so like, yeah, well, because you're basically, you can't get inflation. I mean, right before COVID, our inflation was stuck at 1.75.
For a long time.
Yeah, they were thinking about lowering the target. So what's to stop that from coming back? I mean, over time. I don't think, like over the next year or two, obviously. 10 years is 2033 is what I'm saying.
So again, one guy's opinion.
No, of course.
I think the natural interest rates for mortgages are somewhere between 5 and 6.5%.
Oh, wow.
The natural.
So you think like that long-term average back to that. Not this, because the counter argument is, well, the 40 years of basically disinflation from the early 80s, right, to now is the trend that we'll just go back on. That, we're on that disinflation path, and then, we printed too much money, and then, okay, we back.
I think we tested QE, and I think QE led to the Fed put.
Oh, and that's
I
what
want
Powell
the
wants
Fed put killed.
Well, so maybe you want it killed, but...
Or I should say Powell. I believe Powell wants it killed.
Why would he want to, though?
Because I think deep down, he doesn't like the fact that Wall Street wins either way.
Interesting.
Right?
Okay.
Wall Street takes on over leverage, no risk management, and gets a bailout.
Yeah.
We pay for it.
Yep.
I think he's tired of that.
Interesting. So punish Wall Street.
Look at billionaire Barry Sternlicht.
Oh, yeah.
Dude, he's getting hammered.
Well, yeah, because he bought a bunch of real estate in the bubble of 21 or whatever, and now he's dumping it.
Well, that, and he has bad debt. He's illiquid.
Crazy because he's a real estate guy.
Yeah. He's got a bad debt structure. He sold 2,000 homes. Yeah. This is back to your question about will the big institutions sell?
Yeah.
So, if you look today, they are net sellers.
Yeah.
But what does that mean?
Yeah, right.
They bought 400, they sold 600.
Yeah.
But they're net sellers, right?
Yeah,
if you want to create a crash headline, they sold 200 more than they bought.
I mean, that's a good point. Yeah. It's nominal relative to, would you say 4 million transactions or whatever?
Noise.
Right.
But factually correct. Noise. Then what happens if Wall Street wants to sell thousands at a time? Do you think they're going to call their local agent and list all 1,000?
Yeah, you're right. Probably not.
No, they're going to call 5 buddies on Wall Street.
Yeah, sure.
And say, who wants them? Barry did this. He called everybody around and Invitation Homes gave them the best offer.
Bought it. That's interesting. Yeah.
So they're not going to be dumping in mass. And they have different structures and they're paying dividends. They're REITs now.
It's like a dark pool in stocks where they traded in the, off exchange, basically.
Off exchange. They'll sell onesie twosies. We want out of that market. We want out of this, whatever.
Yeah, but the time it would take to sell 1,000.
Can you imagine the walkthroughs and the inspections?
Oh my gosh. Or even the light.
No, they're going to sell it to one guy one team at one stroke of a pen.
Wow. Yeah. So then no price discovery.
They'll stay rentals.
So what about the Airbnb bubble then? Something's got to cost.
Yeah, I think.
What's going to cause prices to come down?
If you happen to be shopping in a market like around Dollywood,
okay,
you're going to have a good time to buy.
Oh, interesting.
Because again, there are some markets that got a flood of out of state, out of area money.
Well, that happened in 2008 too. I mean, Florida and Vegas, these were like your bubbly of bubble markets.
The towers, right? Everybody was buying and flipping condos until they weren't. So anytime you had an outpouring of external capital that was overpaid, because the beauty about real estate, you know this traveling around the country, is every market you go to, there are investors that are killing it.
Oh, absolutely, because they know their market.
Yeah, they know their buy box.
To Fresno.
Let's go. So they know their buy box, they know their market.
Yeah.
But if you come in with external money and you're arrogant, you overpay.
Oh, you get screwed.
And
absolutely
overpay.
Get screwed.
And overpay.
Well, because all the contractors know, out of area.
Yeah, they know the phone number, right? They see the 408 or whatever your area code, 949 or whatever.
Well, and then they think you're not going to check on the work and you're not going to sharpen the pencil.
Big mess.
Oh, yeah.
Right?
Oh, yeah.
Right? So I do think there's some Airbnb pain, but it's going to be very localized.
Interesting.
It won't be big enough to impact the country.
Wow.
It'll impact a couple of little pockets. And if your area happens to become illegal, get ready. You know what they're going to do, though? They're going to flip to midterm.
Yeah.
They're going to go midterm furnished.
Is there enough demand for that?
That's the wrinkle. I don't know.
I don't know that either, because I've been very tempted by that, because obviously you can get a higher yield.
Yep, correct.
It's not that much harder to manage. It's more intensive, obviously, than long term, but compared to short term, it's a joke. It's a joke. Easy. Yeah. But I mean, let me put it this way. I've never needed a midterm rental, you know? Like, who has? I don't know. Like, the traveling nurse, but okay, how many traveling nurses can there be, right? It's like, at what point does a hospital have all traveling nurses versus just like 2 or 3, you know?
Yeah, I will agree with folks that there's a need, because traveling nurses, construction workers, they do exist, right? Oil workers, whatever.
Yeah.
Long-term contracts. I don't know how much. I don't know. It's not where my area is. It's not where I play.
I don't think if I put a rental ad up, and I'm going to try it, but we'll put a rental ad up and be like, available for long or like in the bottom of the description, you put also available for medium-term rental.
But here's the wrinkle.
We'll get any interest.
It has to be furnished.
Right. Like we'll furnish or whatever. We could advertise. I would guess if we advertise both possibilities,
long-term will come.
I'll rent it long-term in a day, and the medium-term will take me months.
Correct. That's my guess as well, unless you have to be right next to a hospital.
Right. Yeah. Good point. That's really interesting. Okay. So that's Airbnb. That's rates. Yeah. Because we said, what are we at? 8.3% now. So what about a first-time home buyer? I mean, like, how did you get started, and how should a first-time home buyer start today? Because people look at this, they're like, this is insane.
I feel for first-time home buyers today. It's remarkably tough today. Affordability is horrible. Yeah. You can't get around it.
Yeah.
That said, you can make a choice. You can make your landlord rich, keep paying rent. You can live with your parents. I mean, there are options.
Okay, that line is really funny. I have to interject. When I first became a real estate agent, I printed like the sleaziest like landlord picture I could find. Yeah. He was like on a sofa or something like that, and smoking a cigar. And what I did is I put some text under it, and I'm like, "Thank you for paying my mortgage." Yeah. And then I stuck that up in laundry rooms of apartment buildings.
Nice.
I got a phone call.
I bet you did.
From the property manager.
I bet you did. Take this down, son.
Yes.
We're going to rip that off the wall.
Never show up on our property again. In fairness, looking back, I'm like, okay, I get it now. But then it was funny.
It was funny. But yeah, there's no question it's hard. There's no inventory.
Yeah.
There's competition. You're bidding against landlords that are buying, because again, everybody's kind of fishing for that sub median that's move-in ready to rock and roll. It's hard. If I had to start over, the first thing I would do is house hack.
Yeah.
I would probably house hack units.
Yep.
And just yesterday, so we're recording this on Thursday, just yesterday, Fannie Mae released some new guidelines that you can get into a triplex and a fourplex with 5% down.
Which we were saying used to be, what, 20 something?
Used to be 20%. Yeah.
Which
now
is sad, because you think homeowner occupied should be 5, but then you go, what, 3 units, 4 units, and I have to put that much down?
Yeah. So it's brand new guidelines, goes into effect 6 weeks. That's what I would do. I would house hack that.
That's a really good idea.
It's not for everyone. I understand.
Is it harder to get a wedge on multifamily for most people, or can they find those low rents?
So you can find them.
Yeah.
There's just less of them.
Way less. Yeah. Okay.
Way less. Also, what you can do what you did, right? That second book you talked about at the opening has your story in it.
Oh, wow.
Because the 203K loan.
Oh my gosh, the renovation loan. It's a pain in the ass, but it's great.
I mean, for your first home?
Yeah, you got to go through, you got to work, you got to do what you got to do to get in.
Yeah, you got to get on the property ladder somehow, some way. So there are lots of ways to get in. It's real estate investing and buying home is never easy. I've been doing this 22 years.
Well, that's why there's money.
Easy.
If it was easy, there would be no money to make. I tell this to everyone I work with. I go, look, buying homes and renovating them, it's going to be a headache. You're going to have to fire contractors. You're going to have to refine your contractors. You're going to have to work hard to find new ones. There are going to be material problems. There are going to be tenant problems. There's always something. But that's why there's money to be made.
Correct.
And that's why you should buy. So how do you get started? So you get started, rent out rooms or rent out other units?
Yeah.
Okay.
And so I'll go back to my story, how I started, right? So it's really weird. So I'm Generation X, right? Gen X. I was raised with the belief that you go to school, you go get a good job, you go back to school, you get a better job, and you climb the corporate ladder. I believed that until I was 30 years old.
Okay.
Right? So I went and got a degree.
So you were on the path for a while.
I was on the path.
Okay.
I happened to be investing because I'm that old in the .com crisis. So I turned $7,000 into almost $200,000.
Oh, wow.
Right? So much like the crypto stuff, but just .com stocks, right?
Yeah.
So you start getting cocky. And then I lost 80% in like 10 or 11 days.
Oh, no. 10 or 11 days.
So it took me 3 or 4 years to build it. I lost it all in, a weekend, seemingly.
Oh,
right?
That's terrible.
So I come out with $40,000. It's more than 7, but I remember the 200.
Of course, everybody does.
Everybody does.
Yeah.
So then I go and I read the Purple Book, which is Rich Dad, Poor Dad.
Oh, yeah.
And I'm embarrassed to say this, Kevin. I have an advanced degree. I'm an accountant. I have an MBA. And I knew no one that had rental properties. I didn't know it was a thing.
Oh my gosh.
So then I spend a year, because I live in the Silicon Valley.
They don't teach it at school.
They don't teach it at school. Nobody in my family talked about it. Yeah. And I was looking for cash flow.
Yeah.
It doesn't exist in the Bay Area. No. I didn't know that.
Yeah.
You snicker, but I wasted 52 Sundays, man. 52 Sundays beating my head against that wall.
Oh.
So ultimately, I find Fresno, California, 2.5 hours away. I buy.
That's why you moved to Fresno.
I
got
live
cash
in the Bay
flow
Area.
here.
Cash flow. I invest there.
Do you live in the Bay now?
I live in the Bay Area.
Oh,
2.5 hours
interesting.
away.
I thought you lived in Fresno as well.
Mountain View, California.
Oh, that's you asshole. That is a beautiful area. That is so nice. Okay.
It's very nice. It's very nice.
I'm jealous.
Yeah, it's a very...
You're coming down to Ventura and you're like, what is this, poverty town?
I flew into Santa Barbara. It's beautiful.
Good one. All right, touche. All right.
Yeah. So we go to Fresno. We buy that property. But where I'm going with this is I was always an employee. I always have an employee mindset. The thing that impressed me about you and why we did our first interview is I look at you as an entrepreneur.
Oh, okay.
Born that way. Just freaking wired differently. Okay. But most people I talk to are employees. And they don't understand getting on the property ladder. They don't understand that inflation is a feature, not a bug. Cash flow day one. I think you can fundamentally change your retirement by getting to 4. That was my goal after reading Rich Dad Poor Dad. If I have 4 rental properties and I bust my ass until I'm 65, my retirement will be better than most. 100%. That was my vision.
How many retired people does anybody even watching know that has more than 4 rental properties? Crickets, I bet.
Yeah.
1% maybe.
Not many.
Not many.
No. But when
it's so attainable too.
Yeah.
Every few years, just buy a home.
1 every 2 years. That was my goal. That was my grand plan.
There you go.
After reading 1 every 2 years.
Wow.
And then you get in, you start doing the work, you start to understand how to leverage capital. You go from, my $40,000 was gone after 3 houses.
Wow.
I never put another dollar in. Everything was cash out, refi, or 1031 exchange.
Oh, good for you.
We built a portfolio of 170 some odd units.
That's amazing.
From 3 houses.
That's amazing.
Over 20
and now you have a
years.
multifamily building as well.
I have
part of that, I guess.
Yeah, no, it's probably 100 units in apartments and 50 units in homes and some duplexes and quads.
That's amazing.
Yeah.
Wow.
So
did you manage all this?
No, I've had a manager. 2.5 hours away, brother.
Yeah, I know.
I had a PM since day one.
Yeah, okay.
My job took. I was often in 3. My last 10 years, I traveled almost every day.
Oh, it's
so
exhausting.
Airplanes.
Yeah.
So I bought everything out of the MLS.
Yep.
No door knocking. None of this stuff out of the MLS. My job was find deals, secure capital.
But people
pay
get
somebody
mad
else.
when you say MLS. You're not allowed to buy MLS and go on YouTube and say MLS.
Oh, I'm sorry. Well, that's what I did.
I mean, I think people think there are no deals to be had on the MLS. There are plenty of deals to be had on the MLS.
Yeah, and again, I think today, what am I doing today?
Yeah.
In my market, if it's over 30 days on the market and it's in my buy box, I write an offer.
Oh, nice. You're lowballing.
Of course.
I love it.
I'm looking for a motivated seller.
Yeah.
Here's what people don't understand.
Yeah.
The 22 years of I doing this is the second best year to find a motivated seller.
Ooh, I love this.
Second best year. 2010 was better. Sorry.
2010 was great because everything was short sale and the sellers didn't care.
No buyers, dude. That's what it was.
Oh, that's also true.
Because nobody can get a bank loan.
That's so funny you say that because I got in the industry in 2010 and I remember asking the community, the real estate community, like, so how did I get started? And they're like, find buyers.
Yes, exactly.
Yeah.
That's what I don't get about it. Everybody says the price crash, we get a price crash, I'll buy.
Yeah.
No, you won't.
Yeah, no, they won't. No.
You'll be scared it'll keep going lower.
Yeah.
So again, right, you can look at North Drive. You had it up earlier.
Yes.
I buy for 107, sold for 265 or 263, whatever it was. It ultimately goes to 300.
Yeah.
And then it crashes all the way to 75.
Jeez, Lord.
There were nobody buying at 75. I was buying properties the whole way down. The cheapest house I bought was 23 grand or 28 grand.
Did you lowball it then?
I tried to buy that one for 55. Somebody up paid
Okay.
me.
Norris.
North Drive.
Oh,
I tried to
see.
buy it back because it was the first one, and all of that.
Interesting. I want to look at the comps now. Like,
Go for
what's
it.
the market doing now out there? Are things sitting, or like, what do you see?
Same deal. So Fresno, California's median's roughly 400, 395.
Okay.
If it's 600 and above, crickets.
Okay.
If it's 300 and below and move-in ready, it sells like hotcakes.
Interesting. Yeah. See, like here's one for 479, just dropped $46,000.
If it's below, if it's above, it's
here.
very repetitive.
Here's one that looks new, 667,
Crickets.
77 days on the market.
Crickets.
Wow. Yeah, you're right. Oh, that's really interesting.
I look every day.
And so what's your hit box over there?
So my buy box is single family because I'm buying single family home.
But you can't scale single family.
Yes, you can. If you buy enough of them and then you 1031 exchange into apartments, you scale just fine.
Nice.
And with all the pain come into commercial, that's what I'll be doing again.
Ooh, going from the single to the multi.
I did it once. I'll do it again.
Wait, so are you saying buy singles now and then as the pain comes for commercial, flip over?
I will repeat what I did in 05, 06. I will sell everything that's residential and 1031 into apartments.
Okay. And so what do you think about do you like 3s and 2s? Like, what's your favorite?
My favorite rental is preferably 4 bedrooms.
4-bedroom rental. Okay, because they stay longer?
They stay longer.
Okay, less turnover.
Less turnover.
Okay,
yeah.
I like that.
Yep.
Yeah, I'm just looking at sort of the Fresno market out here. It seems like, 3 and 2s all day long for like the low 3s or whatever. And so what are these things renting out for? Are you getting good,
so it depends on what part of town, but you'll get anywhere from like 1,900 to 2,500.
Okay. And like, who rents this? I mean, do you rent by credit score? Or what do you like to rent
so
by?
I have credit score and 3x the rent for income. And no evictions.
Okay, that's your rule of thumb. As long as you have that, you're good. So no evictions, 3x credit, and you're running this through what software?
I have a property manager, so I give them my rent box.
They give you the report, done.
Done.
And you pay them what, 8-9%?
6%.
I
have a lot of units.
Because you have volume. Got it. Yeah, and then you also have the building that they're managing with the units. And
I have a big unit, so it actually has on-site and blended rate.
So there's a salary for that or discounted rent or whatever it might be. Got it. Okay, that's fantastic. And so the goal then is, you're still buying right now because
Absolutely.
you flipped too, but you're still buying now?
Yep,
and
absolutely.
You'll buy these, and how long? When do we flip to commercial?
So my guess is the commercial pain is in the first inning. I think most of the pain will be on the really big stuff, which I don't play in. You may have the opportunity to play in. I'm targeting 20 to 40 units.
20 to 40
So
units.
I'm thinking 18 months-ish. Because again, what people don't understand, again, I say this was experience. They think residential and multifamily operate in the same cycle.
Right.
They say real estate and they think it's all the same.
Yeah.
It is not the same.
I mean, I guess in some regard, it has to do with rents though, because see, if rents, like let's say values on the multifamily fell because rents were going down, well then it would be more desirable for people to rent an apartment versus a house maybe, and then you could affect housing prices. But you're saying, no, rents aren't going to come down. It's just the prices because of the loans, and you don't have the lock-in effect protecting you like you have on single families.
Correct.
Oh, this is very complicated or rigged.
Yeah, the beauty, I mean, just do the math, right? You buy a building, let's say at a 3 cap.
Yeah.
And now you have to sell it at a 6 cap.
Ooh, yeah.
What kind of haircut do you take?
Yeah, 50%.
All the equity's gone.
Yeah, right, because
the bank takes a hit.
Yeah, because you probably put 50% down or
no,
whatever.
you probably put 25% down.
Oh, that's
30%
true.
down.
That's true. Yeah. I
Equity
guess.
gone. Bank takes a haircut. I step in as the new buyer at 50% off.
Oh yeah. Yeah, that is interesting. So that now you're gonna have some, but and the interesting thing I think people forget too is that even if you have that, I think a lot of people are worried that it's the banks that are going to take most of the hit. It's actually the owners of the buildings who take
the equity.
hit. Yeah, the equity gets wiped out first. Always.
Again, let's play 06. Let's play 09, whatever year we want to take to today. In the Great Reset or the Great Recession, whatever you want to call it, the loans averaged 99%.
Oh,
some were 103. You know this, right?
Yeah.
Because it was residential products, and 97% was a lot down.
Yeah.
So any haircut the bank took. Commercial loans, which I have some, got so loose that you could put as little as 25% down, but always 25.
Right, because on some houses you could even borrow up to like 1.10%.
Exactly.
In some cases. Yeah, it's crazy.
But you can't do that in commercial because the debt service coverage ratio, right?
1.25 or whatever.
Whatever, right? 1.25, 1.3, whatever they say. So what people don't understand about what's coming is the equity, which again, in a world where syndicators were over their skis doing fees and having teams and having deal flow to pay the bills.
I would not want to be in syndication.
I wouldn't want to be an LP in a syndication.
Oh, yeah.
Right?
Wow, yeah.
Their equities, their money's gone and they don't know it.
Wow, really? You think it's that bad?
Gone.
Wow.
Gone. I mean, read the real deal.
So you could make videos like housing crash, except here it is, not
You
there.
would say real estate crash.
Real estate crash, okay.
I would say real estate crash, not housing.
Okay, see, I need the title
Clean
inspiration
up.
here.
Yeah, it's real estate. But yeah, there is a real estate crash. We've had a transaction crash in residential.
Right.
We will have a value crash in multifamily
And
office.
you think that'll insulate office? I mean, I think everybody's like, oh yeah, we know that. The multifamily, that's very interesting. And you don't think that will have much, if any, impact on the single families?
Again, I think rents on multifamily will come in, not single families. People want to live in single families.
Yeah.
They want the backyard, especially today. What did the pandemic teach us? Space is good.
Yeah.
Optionality is good.
That's a good
I want to
point.
put something in my garage. I want a backyard for my dog. Space is good. I can only think of the thousands of tenants I've had, how many people moved from the house to an apartment. It was usually a divorce.
Good point.
Once you're in a house, you want to stay in a house.
Well, and the turnover on units is going to be a lot higher because people are trying to get to that house.
Yeah,
or
my
whatever,
average, and I've done the math several times. My average on apartments, right, which are just like next to each other, is 2 years, roughly 2 years.
That's actually really good.
Yeah, it's just under 2 years, like 22 months. My houses are over 8 years.
Oh my gosh.
8 years. 4-bedroom bath. That's why I like
Fantastic.
8 years.
Yeah, because the expensive part is the turnover. But
Correct.
Apartments are obviously less expensive
Smaller,
to turn
da, da,
because
da,
it's just
yeah.
carpet and paint.
Yeah, lower quality stuff. Blah, blah,
Yeah, exactly.
But,
wow. So you're writing offers on single families.
Correct.
What's the competition like on these over 30 days? Are they like, oh, screw you, I've already had offers like this? Or
So I run a very simple process.
okay.
So I find a property I like. My offer usually is 30% or more below listing.
You just take the price and take off times 0.7.
Yeah, I run the math. I only write deals that produce a great yield.
Okay.
Right?
Cash flow yield.
Cash flow yield. Right?
Okay.
Basically, invested capital.
Yes.
Down payment, repair costs, closing costs.
All in.
Numerator is expected cash flow.
What do you want? What's your percent?
So my average is 6.
Okay.
I only want 9.
Wow.
I'm only doing great deals. And every market's different.
Wow.
San Diego might be 2%, this or that.
Right, but that's a problem. Like, how do you justify that? Why is San Diego 2% if Fresno you could do 7 or whatever?
Well, some people only want to live in San Diego. Some people only want. I don't justify markets, right?
Okay.
Because if you want to go get a double digit, go buy in Detroit.
Yeah, right, correct, yes.
You can grow broke buying cheap. My market where I know I will only get 9%. So I write offers that will produce 9%.
Well, what's the difference between buy cheap, go broke, your market then? And where's the line?
Well, here's the deal. You and I live in California.
Yeah.
I'm sure you have heard the following statement. I can buy a house in said city in the Midwest for less than the cost of my Tesla.
Oh, yeah, yes.
You've heard
this.
this.
Of course, but who wants to live there? No jobs, whatever. Schools, crime, whatever.
Even worse, why is that a good deal?
Yeah, right, yeah. Well,
That's the problem.
Yeah.
Why? So it's cheap. But so what? Maybe there's a reason for it's cheap.
Yeah, they give them away in Detroit. You just pay the
for $1.
taxes. Yeah,
right,
pay the back taxes.
But here's the problem. We get a lot of folks, at least I do in the Silicon Valley, so I'll speak of my experience, that have money from stocks or options or companies going public.
Oh, they buy
it is.
along the highway like crazy. Like, look at Hayward.
Yeah, exactly. Right, exactly. So what they do is they find these prices, they pay cash, so they think they're okay. And what they don't realize is they're being arrogant. They're trying to jump the line because they have money. You have to learn the market.
Yeah.
Like we talked earlier, every market across the country, there are experienced investors.
Yep.
And I hate it when I hear a brand new investor say, I just bought something in pick a city, Midwest.
Yep.
And they tell me, I paid list price.
Yeah.
It was on the market 90 days.
Yep.
And they think it's a deal.
Ouch.
I'm like, there's every local investor kicked that rock 3 times.
Yep.
And you paid list price because you are arrogant or lazy or both.
Yeah.
You're going to lose your ass. And most of the time they lose their ass.
Wow.
So
Yeah,
you got to know the market, man.
Oh, 100%. So, okay, so that's really interesting. So how many deals are you striking right now in these levels? I mean, is it still too early, or what do you think?
It's probably still early. So
Okay.
I expect, because winter, people have to sell all the time. I did 2 last year. I expect to do 1 or 2 this year.
Okay, good.
I'm only trying to do 1 or 2 a year.
Sure.
It is my capital, no partners,
Good
all
for
of
you.
that.
Oh, partners. Mm.
Yeah, no partners.
Yeah, I can't do that.
So yeah, I try to do 1 or 2 a year. Most of my deals are between Halloween and New Year's Eve.
Yep. November, December. Man.
I'm playing the winter. I'm playing everybody's on vacation.
Yep.
Right. Thanksgiving weekend, for whatever reason, is a great time for me to strike a deal.
Black Friday.
Black Friday.
Black
Right.
Friday
Everybody's
sales.
shopping.
Yeah.
So I expect this year to be no different. So I expect to get 1 or 2 deals.
Okay. What are your favorite markets outside of Fresno? Is that it?
That's the only market I know in detail. I happen to have just bought a big ass house in Vegas.
Okay.
So I'll be spinning up Vegas next year just to prove I can.
Is this your personal residence?
It's a personal residence. It's a second home
so
currently.
now your
but
income taxes are going to zero.
state. income
Yeah,
tax.
of course. Yeah,
State
yeah.
income tax.
Okay. So why? I mean, you're going to go from the Bay Area, which I want to be very clear about this. If you were going from San Francisco to Vegas,
Yeah. Different.
good for you.
Yeah.
Okay.
That's a good trade.
Yeah, that's a great trade. Okay. Mountain View to Vegas.
Yeah.
What part of Vegas?
Henderson, Black Mountain.
Okay.
Yeah,
Okay.
nice
All
area.
right. All right. Okay.
So this is why.
Congratulations.
Thank you. I've been retired for 6 years now.
Okay.
I don't have to work.
So why do you care about the state income tax?
I don't.
Okay.
And that's why
Okay.
I didn't move.
Okay,
But
okay.
my vice,
Yeah.
more specifically, my wife and I's vice is eating out.
Oh.
We eat out 10, 15 times a week. We're spoiled. Lunch, dinner,
Vegas
doesn't.
is the place for this.
But even worse, we had all our spots in the Bay. We've been together 30 years in the Bay.
Oh.
So we had all our favorite spots.
Yeah.
Over the last pandemic has crushed that.
Yeah, sure.
They're
All the small-
gone.
you can't afford it over there.
Or the service is gone.
Yep.
Or the quality is gone.
So you have a choice between Chipotle and speaking of Chipotle, is there a Chipotle over there? Did
There
you
go.
get a Chipotle?
I didn't, but that's okay. But
I'll take mine if you have it.
oh, look at that. So at the end of the day, I'm spoiled. I love to eat out. I love good food.
Yeah.
And now I can have great food. I spent a month in Vegas because I didn't know. And we had 2 meals a day for 30 days and only 1 bad meal.
Oh my! Well, I mean thank you for that. Is it? Maybe. You guys figure it out. But yeah, I'm starving. I need like a bite of something.
Go ahead.
But yeah, so I mean, I'm a big fan. I love going out to dinner. But like, do you ever run out of things to talk about with your wife? No. Like, I know this is more personal.
Yeah.
Like, because Lauren and I, we sat down at a macaroni grill. Boy, we were together for like maybe 6 months, and there was this couple probably in like their 80s, and they're like, oh, we're watching them. They didn't say a word the entire time. And I looked at Lauren and I go, I never want to be like that.
Yeah.
And so every time we go out, we just talk the whole time. We're like, we were here for 2.5 hours. What? Like, we're together at dinner alone more than like when our company goes out to a dinner, it feels
Nice.
like. So that's good. That's
Yeah,
awesome.
you have to work on it. Relationships are just like health. I know you were on a health kick. You lost a bunch of weight running and all that.
Yeah, oh, yeah,
You got to
yeah,
work on
yeah.
your relationship.
Yeah, that's a
you
good
have
point.
to be focused. Otherwise, it'll go the wrong way.
And you have a daughter?
I do.
That's awesome. Any other children?
Nope, just one. She's 32. So
32? That's
she's,
awesome.
She's, yeah. She's
And
a lot of fun.
you going to get her into real estate?
I did it wrong.
Okay.
So she was 10 or 11 when we were buying all these trashed foreclosures.
Okay.
So we drove to Fresno with her in the car to see these dumps.
She's scarred.
I suggest never taking your kids to see ugly properties, only taking them to the pretty ones. I made that mistake. Don't repeat that mistake.
Aw,
so
that's
she's,
okay.
but she's had a good life. I mean, her
yeah,
education
of
was
course.
paid from it. She's an artist. She's having a good time. She's happy. That's all that matters to me.
That's
She's
so
happy.
important. Oh, that's great. This is really cool. So advice to first timers now is just get in, eh? Is that your suggestion?
My first advice is don't overcomplicate it. I have this saying, create a buy box.
Okay.
So what is a buy box? It is a set of criteria that produces between 20 and 40 active listings.
Okay.
That is it.
Yeah, you don't need more than that.
Then you look at that every day for 20 minutes
All
and
the
you
new
track and you track the changes.
Yeah, you don't need that many.
No, in 90 to 100 days, you will be able to tell me or you or your wife or husband
Good
what
deal
an
or not.
average deal is, and then you just change the math for a great deal. I had the same buy box in Fresno, California for 3 freaking years.
Wow.
A buy box is 2 things: permission to focus and permission to ignore.
Oh, well, gosh, because if you're looking at everything, you can't focus.
No, you
It's
go
impossible.
backwards. And then you add other cities.
That's impossible.
Come on, man.
No, like, 2 cities at a time is what we're going to do with House Hack, a real estate startup. Because otherwise it's just impossible because you need to, how do you scale construction? How do you scale the management? It's insane.
Yeah. No, you've got to, certainly new investors, again, and the other beauty about today is real estate is slowing down.
Yeah. There's no rush.
There's no rush.
Patience. I keep saying that. Patience.
You can learn.
Yeah.
You can learn. And then the last thing is, like I said earlier, in this market is the second best market to find motivated sellers.
Yeah.
So people are saying you can't do it.
Try.
Try.
It doesn't cost anything to try.
Yeah, write an offer. Makes sense for you.
Yeah.
The seller can call you all bad words, could say nothing.
Yeah.
They could counter, or they could say yes.
Boy, what do you make of this? So I'm going to find like this volatility. We don't have to put this on screen just because I don't want to piss these sellers off. But I was in a city in NorCal, and so you've got a fixer-upper that comes on 450.
Okay.
Multiple offers. People are like clawing, like stepping over each other to try to get this thing. Matches your formula, the 75%, right? And then you've got comps in the neighborhood that justify that place is probably worth about 590 to 6. Okay, so that looks like a wedge deal. That's great,
sure.
right? Because you could put 40 into it. Hey, that'd be about 100, right? If you put a little more in, okay, it's an 80K wedge. That's still fantastic. That's free money basically then. So then what happens is I'm watching this market. Like you say, it's in the buy box. I'm watching the market and I see a deal come up. Model match. This is why I like tract homes.
Yeah.
Model match has a pool as well. Same square footage. It was like 1,700 square feet or whatever. And hits for 590. And I'm like, okay, well, that's what we thought it was worth. Like, okay, 590. Let's see if it sells. So I'm really impatient when it comes to real estate.
No.
I'm just impatient in general. But that listing hit the market on a Friday morning. I called the agent at 8 o'clock on the Friday night because having been an agent, I know that if that's a good deal, she's got agents, either she has offers in her inbox
Or text saying one's coming.
Bingo. Exactly. So I call her up Friday night. Hey, do I have time to get a client to the open house this weekend?
Right.
And plenty of time. So go to the open house, and she has the open house, whatever. I don't call her again. She calls on Sunday. Hey, is your client still interested? Calls back a week later. Hey, is your client still interested? I'm like, that place isn't moving. They're gonna have a big price drop. Sure enough, they did. Price drops 40K. Now you're at 550. So the question is, what do you do when you're in that kind of market where all of a sudden it seems like real estate hit a wall in a certain market where you're like, wait, the sold comps are 590. Now all of a sudden the sold comps are going to be like 530. And what was a 100K wedge is now a 20K wedge. Yep. What do you do in a market like that? Like you've seen this, I'm sure, in Fresno. How do you know when the bottom hits? What are your metrics?
So I don't know that there are specific metrics, but if I was hunting in that kind of market, I would not be hunting for the 450s because everybody out there knows the 450 number is priced low and there's plenty of room.
Okay.
I would hunt, and whatever, like if that market's really quick, maybe it's 7 days, maybe it's 15 days.
Sure.
I would be writing disrespectful offers on all the 590s. Ooh. And I'd be writing them at 480, 470.
Interesting.
Right? Just to find out which one of those sellers has to sell before the end of the year. Right? If the market's telling you where the pain is and the pain is at 590, fish there.
Interesting. Go fishing where the pain is.
Exactly.
Be the shark where the blood is.
There's blood in the water. I like to shop there.
I like that.
And again, if you buy it right, you can hold until it comes back.
So ignore going for the lower price because that's where everybody can still qualify.
All the flippers are there and all of that, and the DSCR loans and nonsense. So that's, again, in that market, 450 is everybody's there.
Yeah.
But I would go 10 days or more on market at 590, which you call it the median, and I would do 30% below that and see what happens.
See, what's scary is I was in Phoenix, and an agent was telling me, oh yeah, I'm writing an offer with a flipper on this. And I'm looking at the numbers. I go, they're going to make like 10 grand. She goes, oh, that'd be great.
Yeah.
And she's like so excited about that. I'm like, this is insane. You're going to go bankrupt. What are you doing? Like, you can't buy real estate like that.
No.
What is that like 2021 and 2022 conditioning, or what's happening?
I think I don't know who that flipper is, obviously, but I would think that would be a new flipper. We are repeating last year. I talk to real estate investors all the time on my channel. 3 of them come on every week.
Nice.
And the number of people who lost 6 figures in January and February were because of the deals they bought in October and November.
Wow.
They're doing it again.
Wow.
Remember, we talked about it earlier.
The flip deals, the bad flip deals.
They did a okay deal in October, November.
Oh, it'll appreciate in the spring.
Because it did before, right?
Sure.
And it sold fast, right? It got bidding wars and blah, 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 right? ARV's higher. And then they lost money January, February, March.
Yeah.
We're doing it again.
Wow.
And it's sad to see. And again, it's probably a new flipper would be my guess.
So you think 8-year cycle, like potentially as long as 8 years of just really slow?
It's going to be a sideways market.
Yeah,
it's not fun, but here's the problem. A sideways market, if you're just an owner-occupant,
Lame.
Yeah,
because how are you going to HELOC and get your boat?
You can't. Sorry. But again, as an investor who wants wedge deals, to use your words,
it's an opportunity.
Because it's slow.
Well, yeah, all the other people who want the phone, the like the memeing or whatever of the pricing,
and they want pretty stuff.
Yeah.
They want pretty FHA VA stuff.
Yeah.
Don't buy that stuff. You can't compete.
Yeah.
They got lower rates. Blah blah blah.
I like it.
But there's a lot of people who have to sell who have shake roofs. Who are this? Who are that?
Mold and damage,
Whatever.
this, that, whatever. Yeah.
Yeah. If it looks ugly, I mean, I bought one that was functional that had the green tile from the 80s.
Oh my gosh, yeah, I
right?
love that stuff.
Love this. I mean,
it's so easy to fix.
Yeah, it's easy fix. So again, I think the wedge deals is the right idea. I would be fishing again, not knowing that market up north, but I want to go where the pain is. And right now, the pain is at the median clean. There's going to be a seller who has to sell. When I write disrespectful offers, I never get the first time.
No, of course.
I don't want to.
Yeah. Well, that means you overpaid. It's so funny. Everybody, like when I get an offer accepted, I'm like, damn it, I overpaid.
If it's not my third offer, I think I overpaid.
Yeah.
Exactly.
It's like, let me run the comps again.
How's that inspection going? What did I find?
Yeah, exactly.
But so I write an offer expecting to be called all kinds of bad words. I call back in a week or 2 weeks, depending on the market. I expect to hear something. Oh, you're still there, blah, blah, blah. By the third time I follow up is where we're really talking. And one of two things will happen. They will either agree to my price or be very close, or they will take it off the market.
Yeah, right. Exactly.
I win either way.
Yeah, no kidding. Yeah, that competition's gone. What let me silence this darn watch. What else? What else are you seeing?
So what I hope people see is real estate getting on the property ladder is the surest way to generate wealth.
Totally agree.
I again think I'm an employee, not an entrepreneur like you.
Okay.
I want employees to realize that getting on the property ladder is possible, whether that's your owner-occupied or becoming a landlord. Inflation is a feature, not a bug.
Maybe explain that. Maybe people won't understand that. So how is that just because of property values and the fact that you're leveraging and therefore your leverage is getting basically
that and debt
down?
Is fixed. We talked earlier about 30-year debt, right? You got the opportunity to refi it below 4%. We now had inflation at 9%, all of these things, right? Inflation is here to stay. Inflation at 2% on 4% debt.
Oh, you don't think inflation's going away?
Oh, no. We've had, I think inflation will be 2% probably for the decade.
Wow.
Right? It's still high now, but
It'll average out, basically.
It'll average out to 2%.
Okay.
Right? We'll eventually get it under control.
Yeah.
But I just think real estate for most people aren't entrepreneurs. They're not going to start a business. They're not going to do other things. Real estate is the most easiest thing to understand.
Simple.
Best taxes. Just hold long term. I think you get wealthy in 10 years.
Wow. What else? Anything else you want to add? I mean, this has been amazing. Make sure to check out One Rental at a Time on YouTube. Do you post anywhere else on social or mostly just YouTube?
Everything I do is on YouTube. Okay. My team puts it on IG and some other stuff.
Okay. So find you on YouTube.
On YouTube.
I just prefer YouTube.
Yeah.
What else?
I would actually. So I want to talk about my 2 books, if you don't mind, for a second.
Please go ahead. Yeah.
So I wrote.
Christians.
Yeah. Oh.
Yeah.
So I wrote One Rental at a Time for me.
Oh.
Right. So I retired. I was depressed because I didn't have anything to do all day. I was a type A, employee. I wanted to revisit reading Rich Dad Poor Dad and how we got to financial freedom. That's what One Rental at a Time is. How we did it. It's not a how-to book.
Yeah.
It's here's all the mistakes and here's the things that went right.
Oh, I love that.
That's One Rental at a Time.
That's great.
I wrote 15 conversations with millionaires for the audience. So I had a YouTube channel at the time, was 20,000 subs or whatever, had great interviews on it. Yours was one. Nice. So I picked 15 stories because there's so many ways to get rich in real estate.
I'll take that burrito really quick. Careful, that lid's open. Thank you.
So 15 different stories of how to get rich because everybody's story is different. And that book is more important because when I was in this journey the first 5 years, it's slow.
Yeah.
And by having, there was a book by Gary Keller, Blue and White, Real Estate Investor.
Sure.
I read the book, okay.
Yeah.
But the last 20 pages.
Well, I think his sales book was a little more popular.
Better, yeah. But the last 20 pages of the Blue and White book are stories of investors that did it.
Oh, that's good inspiration.
I read that every day for 5 years.
Oh, wow.
Because I wanted to know it was possible.
Yeah, of course.
Nobody in my network did this. I want to know what's possible. So I wrote 15 Conversations with Millionaires, 15 different stories because there's so many ways to do it. So that book needs to be checked out.
See, that's really inspiring because I think people think, oh, there's no way. They're convincing themselves of failure before they've even tried.
15 different stories. 203K loan, worked at Jamba Juices. I remember the story.
Yep.
Right?
Oh, that's awesome. Anything else?
No, I appreciate the time.
This is amazing. Thank you so much. Make sure to go check out One Rental at a Time on YouTube. Thank you for flying down to this city from Mountain View.
Santa Barbara's nice.
Thank you so much.
Pleasure.
Thank you. Thanks.
Yep.
That was really fun.
Congratulations, man. You have done so much. People love you. People look up to you.
To which I say, yes, meet Kevin.
Where does this mean we are in the economic cycle? Should we be thinking about buying real estate? Should we be thinking about buying stocks? I have a background in real estate as a real estate agent, real estate broker, real estate investor, a stock market investor, and fund manager.
Why not advertise these things that you told us here?
We'll try a little advertising and see how it goes.
Always great to have you on. Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin.